So welcome to our InterChina Insights. Today we will be talking about how, in our experience and based on the transactions that we've been closing in the past year and a half, we start to see a new pattern by which the playing field for multinational investment via mergers and acquisition in China is starting to change, allowing multinational companies to do really transformational transactions. If you look at in the past 10, 15 years, for an international investor or multinational to acquire scale and relevance was very difficult. Big companies that were either state-owned or they were listed, very expensive, or they were privately owned, but they were hoping to be listed. So they also have high dreams on their value expectations. So we couldn't buy those companies for our clients. So most deals were done in the $50 to $200 million range. So likely not to move the needle. We see that is happening now. I think that we made a selection of only few of the transactions we closed this year. So on the buy side, here you have 3 transactions where we see a pattern emerging that will be repeated at least for the next 2 years, 2023 and 2024. So basically, we are being able to find local premium targets that they are very good for our China strategy of our multinational clients. So you will be able to buy deeply localized value chains. These are companies that will be bringing a revenue and profit contribution that will move the needle. Also, they are all companies that they're pretty impressive in terms of the local technology development. You know, a lot of dozens, if not hundreds, of engineers, lots of patents registered, local patents. So it's a local for local Chinese technology. And also, most of these players, being local premium targets, they are active in high growth segments. So most of our clients are multinational clients are entrenched on the high end, which is growing but not very fast, while real growth in many industries is happening on the medium high end, where local premium players are. So the interesting part of the story is not that there are companies to buy, but why they are selling now. I mean, some of these targets that we mentioned here, we approached in the past, and they say, no way, are you crazy? I'm not selling to you. What do I have gained by selling to you now? However, I think that most companies where we approach now, local premium players, we are at least engaging in meaningful conversations with the owners. Why? So we see a high level of debt, low level of cash. I think that this is short-term, but it's still meaningful, and it has an impact on the mindset of sellers. Also, we see on the divestor side an increasing feeling of uncertainty about the new high compliance in China, where the ecosystem is very, very different for local Chinese shareholders compared with the past. We also see many Chinese companies and investors that they are not 100% sure that they can catch up on the Chinese consolidation wave. These are industries where competitors are shrinking from 100, 150 players in China to maybe 20 or 25 companies. And in the next years, they will even shrink further to 10 or 15. This consolidation game is going to shape the rules of competition, and many of the companies we are buying, they feel they don't have enough cash to play this game. And finally, of course, many of the owners are retiring. These are 60, 65-year-old gentlemen or ladies that are looking to retire. They don't have a clear succession, and they failed, or they don't believe on an IPO. So this pattern is happening. And we think that companies will be able to reach $200, $300, $400 million transaction value type of deals, if not higher. We are talking with companies who are listed. We are talking with China champions, non-listed. and it is a clear trend in our view. And then also this is happening on the divestment side. So these are two transactions among the others that we did this year, where we see again a pattern that will be repeated in the next 2 years. So usually the clients that we are working for, the multinational investors who are doing portfolio restructuring, they are exiting part of the business units where they believe that they are not big enough, and it's very hard for them to scale. I think that's a pattern that will continue. Most of these portfolio companies, they don't match the growth strategy of our multinationals. And also everybody now in China, they are trying to focus where growth is and where they can make an impact. So complexity management is a key issue. Most of these companies we are selling, they usually drain international management resources and attention at scale from our clients. So again, we think that we don't see many multinationals leaving China. I think 80% of our clients are actually doubling down in this market in terms of organic or inorganic growth. But everybody's trying to be very focused, and that's basically why we think there will be more portfolio restructuring coming. So the interesting part of the story is who's buying, and I think it's very interesting to see how the leading state-owned enterprises, the Chinese champion, both listed or non-listed, and also recently IPO'd companies, all these players are active companies on the consolidation process. They are super active. I mean, some of them, they are doing 2, 3, 4, 5 deals per year. They are expecting to grow inorganically times 2, times 3, 300% growth in the next 2 or 3 years. So very interesting to see how these industries are going to be completely different in a few years to come, in part because of this deep consolidation. So transformational deals are coming. Multinationals and foreign investors, they will be allowed to play this game. This is happening already, and I think it's an interesting message to be sharing today. So I hope that you like it and it's value added to you, and we'll continue sharing with you some of our InterChina insights. Thank you very much.